Good day, ladies and gentlemen, and welcome to our class on becoming a day trader. So please make sure you subscribe and hit the bell icon for notifications. So let's get started talking about day trading. Now, exactly what is day trading? There are a lot of misconceptions in the marketplace or with new traders or what exactly is day trading. This is not the stuff in the 1990s where people were laying on the beach making a fortune. Come on, that was a scam then, it is still a scam now. But day trading is not a scam. Day trading is a very specific way in which to trade. Okay. Now day traders are different from investors in that a day trader holds their security for only one day, and one of the firm rules of day trading is exactly the name. You open a position and you close the position within a 24-hour period or within a market 1 day period. Okay. Now they close out their positions at the end of every day and then start all over the next day. But number one, it means that you have no money in the market and no risk when you go to bed at night. That gives you a little bit of peace of mind. So by contrast, swing traders hold securities for days and sometimes even months, and investors sometimes hold them for years. Now, the short-term nature of day trading reduces some risk because there's no chance of something happening overnight that causes big losses. Meanwhile, many investors have gone to bed thinking their position is in a great shape and then woke up to find that the company had announced terrible earnings or that the CEO was being indicted on fraud charges. Okay. Or we've seen recently exactly what can happen with the markets. But there's a flip side. The day trader's choice of securities and positions has gone to work in a day and it's gone. It means if you're a day trader and you think Google is going to go up and it didn't happen today, your position is closed. You close out your position. Now, you might not have made any money or Google might have gone down a little bit today. Now, tomorrow it soars all the way up to where it should have been or where you thought it was going to go, but you were no longer in Google. But the advantage is you can also open a new position in Google the next morning. Now, there really isn't any law, so to speak, requiring you to close your position and open a new position the next day. Now, it used to be a lot more stringent, and in the US, it is a little bit stricter. But most of the people here are trading what we call CFDs. And CFDs are contracts for difference today, or Forex contracts. And these are contracts that you can keep open for the next day and the next day and the next day. You don't have to close them when you go to sleep or the market closes, so to speak. Okay. Now, the markets have all changed a great deal. In the US, in the stock market, okay, you have to declare that you're a day trader, and a broker gives you a very specific type of an account for a day trader. But in the Forex market, there isn't really such a thing. And if you're trading commodities or futures in the US, you have to declare you're a day trader because it affects the credit, the leverage, and everything else. And there are specific rules. But outside the US, we have, under the regulators, CFDs and Forex trading, which allows you to open a position and close a position within a couple hours, or if you decide to keep it open for the next day and the next day, you have to keep it open. You just keep it open, and you do have to pay a small, infinitesimal interest amount, because if you're using leverage, say, you have enough money to buy 100 shares of Google, but with leverage, the broker allows you to buy 1,000 shares of Google, and you put down a deposit. If you keep it open overnight, then the next night, each night, there's a small interest charge. It's like I said, it's insignificant, and it's just because the broker has technically loaned you the money. But it allows you to keep your position open until it's turned into your profit, and then you can close it. So remember, things are a little bit different today than they were when we were talking in the 1990s for day trading, or you heard all these people trading penny stocks and getting rich overnight. When you take up day trading, the rules that may have helped you pick good stocks or find great mutual funds over the years will no longer apply. This is a different game with different rules. Day trading is a crazy business. And let me tell you, I've been trading for 40 some years and I would never day trade. It's stressful. It is exciting, but it's stressful. It requires instant reactions to the market, watching everything continuously. But it can be a lot of fun and it can be very profitable. And I could have done it. Well, I was a trader on the commodities floor back in the 70s. When you're, it's a a game, so to speak, or a style that is much more attuned to a younger, faster thinker today. Okay. But it's a style that can work. But you can also, like I said, trade CFDs in a day trading style. But each and every day is a new day. And remember, nothing can happen overnight to disturb an existing profit of a position. Okay. So that helps a great deal. That makes it safer in a lot of respects, that when you go to bed, you're not going to bed stressed out and worried and waking up in the middle of the night with your laptop looking at prices. But those limits on risk can limit profits. After all, a lot can happen in a year, increasing the likelihood that your trade idea will work out. But in a day, you have to be patient and work fast. Some days there's nothing good to buy. Other days, it seems like every other trade loses money. Okay, so the question is, do you have the fortitude to face the market every morning? Each trading day is different. Traders won't find 2 days in the market that are exactly the same. Yet even though each day isn't exactly like another, there are still patterns that tend to occur over time, hidden within the seemingly random price or the daily price movements. Now, if you want to learn all about trading in the markets in general, okay, you want to learn indicators, you want to learn oscillators, you want to learn how to read charts, you want to learn the different types, you want to learn all about what CFDs are and all the ins and outs, please visit our YouTube channel and subscribe. There are over 1,000 videos here that will help you understand and trade in any market. And if you're becoming a day trader, you need to know how to read price action on charts. Now, day trading was originally only available to financial companies because only they had access to the exchanges and market data. And again, this is what happened when you see the people in the 1990s laying on the beach swearing they're making a fortune trading online. It's a bunch of bull, because in those days, we couldn't get the data as fast as we do today. It means the big companies that had lots of access, okay, could get the data. Not just price data, we're talking about economics data, the faster news headlines, the faster, USDA crop reports, the faster the press release from, Google or Facebook. We as an individual private party couldn't get that data. Okay, we'd have to wait till the news. We'd have to wait for a fax. We'd have to subscribe to some type of service. But remember, there wasn't the internet, so to speak. There weren't data feeds. Things didn't come as fast. Even online trading virtually didn't exist. Okay. Now, there are several different styles of day trading suited to different day trader personalities. The styles range from short-term trading, such as scalping, where positions are only held for a few seconds, or high-frequency trading. That can be a lot of fun if you're just looking for market volatility and you're buying, selling, buying, selling, buying, selling in seconds. And see, today, you have the ability, with the speed of the internet and the speed of the platforms and the speed of execution, to do just this. So most day trading systems have a lot of flexibility and can have open positions for anywhere from a few minutes to a few hours, depending on how the trade is doing. Some day traders will trade multiple styles. Most traders will choose a single style and only take a very specific type of trade. Okay. Because the market offers so much today. There is so many assets you can trade. And if you're just trading, say, precious metals, okay, there is such a broad range. Or you're trading agriculturals, or you're trading stocks or high techs only. there is such a broad range that you can trade today. And you don't have the ability to trade thousands and thousands. You have the access to thousands and thousands of assets online. And it was, again, back in the 90s, you had to go to a stockbroker for stocks, and you had to go to a commodities broker for commodities. You had to go to the metal exchange for metals. Today, you don't do that. With all brokers online offer everything. Now, if you want to trade futures in a day trading style, if you want to trade stocks in a day trading style, it becomes quite complicated today, but you can. The biggest difference with CFDs that's made it so easy is CFDs are contracts. They're contracts between you and your regulated broker to pay you the difference between the price at the open of your trade and the price at the close of your trade if it went in your direction. Because at this point, there is no asset, no ownership being transferred. In the old days, when you wanted to be a day trader in stocks, the broker still had to do all the paperwork to transfer that asset to you and from you. Okay, that's why one of the reasons you had to declare you were a day trader, because they just didn't do it, because just moving all the ownership around or doing a futures contract and having to actually get you the contract in the markets becomes quite complex, especially by the time he secures the contract, you're telling him to sell the contract. CFDs allow you to short or long a market. They reflect the actual value of the market, and they are approved by the regulators, and they offer you the leverage you need to trade. So ranging trades are trades that go back and forth between two prices. This is one of the strategies that are used. A lot of times when you learn how to put support and resistance, you'll find that, say, gold today is trading between 1610 and 1614. And every time it hits 1614, it bounces back down to 1610. When it hits 1610, it goes back. It's ranging between a very specific price range. Doesn't mean it will later today or tomorrow. But you say, okay, every time gold hits 1610, I'm going to buy. And when it gets near 1614, I'm going to sell. And you do this through many, many times throughout the day. And if gold has a little bit of volatility and a little bit of movement and a little bit of speed, you can get in several trades during the day and you make the difference in the profit. So in addition to the style and type of day trading, there are other variances between day traders. Some day traders like to make many trades throughout the trading day, while others prefer to wait for what they consider the best conditions for their trade, and they make very few. They want a little bit more profit per trade. Okay. Now, one day trader might see that gold goes up to 1614, down to 1610, back to 1614. He may buy it at 1610.50 and sell it at 1611 because he made his 50 cents profit. He's thrilled to death, and he can do this many, many times in a day. Okay. Or you can be the guy who buys it at 1611 and waits the whole day for it to get back up to 1614, and you sell it at 1614. You, depending on your leverage, your investment, but one is one style, one is another style. Now, there are many different financial instruments or markets that can day trade, and they offer various exchanges throughout the world. The main types of day trading markets are futures, options, currencies, stock markets, and as I mentioned, CFDs, and now cryptocurrencies. So first, let's be clear about what day trading isn't. It's not investing, which is a process of buying a stake in an asset that you hopefully will build a profit over a long term. Now, how long is subjective, but investors generally hold assets for years, even decades. And then they're usually concerned with the business they invest in. They look at the companies, they look at their solid profits, they look at their expansion, their growth. Or day traders only caring about what the price is of it today and what it'll be in a half hour, an hour, 2 hours from now. Okay. Now, in between the two extremes, investing for years and trading for seconds, it is other investment horizons and other types of trading. Swing traders refer to holding a stake in an asset for several days or up to several days. Position trading refers to holding a stake in a stock or a commodity for several weeks or months. They all carry a certain amount of risk, but day trading is probably the riskiest and most controversial. is also the most exciting. So day trading is a relatively recent phenomenon, one made possible by several events and rulings throughout the past century. In theory, anyone could become a Formula One race car driver, but in reality, very few people possess the skills or temperament for such a demanding sport. The same is true for day trading. Day traders must possess certain personality traits and have access to certain resources in there to be successful. Now, day trading is not something you can do as an off again, on again, part time thing. Day trading requires full time attention. Now, being a short term CFD trader, and opening and closing your positions each day is a completely different scenario. You can trade on Mondays and Wednesdays or nighttime when the kids are asleep because CFDs trade virtually 24/7, and it's easy to get into the market. And like I said, you can keep your trade open overnight or for 2 or 3 days, where day trading is all simply based on this very specific group of traders and these rules in which you maintain. Day traders must have an understanding of market fundamentals if they're going to succeed. Most have many years of experience investing and trading in various markets. It takes money to make money is the cliche that resonates with day traders. That's because they often borrow money called leverage to use it in the market. While this is risky, it's absolutely necessary. Same thing with CFDs. Okay. Now, you're not actually borrowing it. You're not doing a credit application. Leverage is controlled by the regulators. All brokers must offer you, whether you have $1 million account or you have a $10,000 account or a $1,000 account, whether you're a newbie or experienced, all the leverage is the same to everybody. Okay. While this is risky, it's absolutely necessary. Using a large amount of capital to make smaller trades increases potential returns. Day trading is a business and as such requires a business plan. Most plans address short or long-term goals, target markets, trading hours, days, market setups, capital reinvestment, tax consideration, reporting, and all other kinds of metrics. You have to approach day trading as a job, as a business. Day traders separate themselves from their emotions and never act impulsively. They always work with risk capital, which is money they can afford to lose, and they use what we call stop and limit orders to reduce losses. And they always close out their positions at the end of the day. Day trading functions through electronic communication networks. A trader accesses these networks using a computer and a high-speed connection to the internet, which we all know. A typical setup might include 2 monitors working off of one PC, a second clone computer to serve as a backup, the fastest internet you can get, and the speed of your computer is ultimately important, because if you're trading in small increments very quickly, you need to be able to access the data, has to come into you fast. You need to be able to execute your trade extremely fast. Okay. You might want to have analytic software or scanners that are watching for specific things in the market, because you can't physically see all of that and watch and monitor everything. So scanners you can set up to watch for specific things, and they will just, report back to you, even robots. People who attempt to trade without these attributes or resources are very likely to fail, and many do. Those that succeed encounter a very difficult learning curve. It's not something easy. So starting out trading CFDs can help you move into day trading, because CFDs have less stringent rules, and even though the markets move just as fast and the price is the price, CFDs have a little bit more flexibility. They offer the leverage, they offer buying and selling, buying long and selling short. Selling short means you sell something you don't own to buy it back at a later price in the day for a higher price. Okay. So in other words, if I think the price of wheat is going to fall today, okay, I can sell the wheat in the morning. In the morning, say the wheat is selling at $10 a bushel. So I'm selling something, even though I own no wheat. I sold 1,000 bushels because I think later today the price of wheat's going to come down. So when the price of wheat falls to $9 a bushel, I buy the wheat. Okay, so I buy to offset what I had sold earlier in the day. And at the end of the day, the two mitigate each other, because at the end of the day, I sold 1,000 bushels, I bought 1,000 bushels, but my profit was the difference between the buy, what I sold it for and what I bought it for. So I sold it at 10, something I didn't know, bought it back at 9, so I made the profit of $1 per bushel for 1,000 bushels, or I made $1,000. And it works in the reverse if the market goes up. If you buy now, which is easy to understand, you buy at $10, you sell at 11, you made the difference. But a CFD allows you to buy and sell. But either way, it's a full-time occupation. Part-time day trading is possible, but very, very difficult. Day trading for beginners usually starts with research. They look at for different ways to improve their trading and dedicate a vast amount of time for the search of the Holy Grail. But you also have to learn, you have to have a great deal of market knowledge. You have to learn how to read charts. You have to learn how to find patterns, how to apply technical analysis, and you have to understand what works in small time frames very quickly. So you have to develop a very strict trading plan and follow it strictly to manage your risks. As mentioned, day trading Forex is riskier than long-term trading, mostly because of the high pace and frequency of trades. Day traders experience more pressure and have to be able to make decisions quickly and accept full responsibility for their results. So there are many ways and many things you have to learn, but it's possible to be a day trader. My advice to everybody is to start out with trade CFDs, and if you want to adopt a day trading philosophy and make sure you don't leave any positions open overnight, that's perfectly fine. You want to do high frequency trades during using CFDs, that's perfectly all right. It's fully regulated in Europe. CFDs are not allowed in the US, and the US has very specific rules about day traders, and you have to declare to your broker you're being a day trader, and it's got different capital requirements. Okay, but remember, anybody can be a day trader. Retail day traders, specifically those who manage their own rather than somebody else's money, have another rule, and that is they always apply stop losses, because that way if the market moves against them, their trade is closed out. So the bottom line is this: even if you somehow manage to know what the news will be, there is no way to predict how the market is going to react in the first couple hours. Bullish news can cause bearish market jerks and vice versa. Eventually the market will return to its trend, but until it does, the environment isn't safe enough to trade. But as a day trader, you want to capitalize on that volatility, that jump up and that jump down and that jump up. So you're only in and out of that market really quickly, but you have to be really careful. So the absolute bottom line is to keep in mind that a trader might not be able to protect his account with stop losses around the news. If there is no liquidity in the market, the order won't close. It will continue sleeping until the first available counterparty is willing to trade. We learned that a couple years ago when the Swiss National Bank pulled out the peg on the Swissy. So many people, even though they traded with stop losses, the stop losses couldn't be honored because it means to sell or close your position at a price you specify. But if there's no buyers or sellers to offset your trade, that means you're stuck in until the market can find one. Okay. Lately, with the virus volatility, okay, sounds like it's great to make profit, but you have to be very, very, very careful, because when the markets are collapsing, everybody's selling and nobody's buying until the bottom price has been reached. So basically, it is only the price that you will trade. However, the best day trading strategy is always to trade at your price only. So think about day trading, but think more about CFD trading. And like I said, there's different rules and different things, but this 1990 stuff that you heard about making a fortune while laying on the beach doesn't exist. Day trading is a lot of work, a lot of effort, a lot of knowledge, but you can be successful if you want to learn it. And right now, as the world is going topsy-turvy with our quarantines, so to speak, maybe it's a time to learn about day trading. Find a demo account. Don't trade real money. Find a demo account. Practice on a demo account. Start learning. Get ready to find maybe a new career if you want, or take advantage of the time you're locked in your house. But do not risk your money. Find a demo account, trade for months on a demo account, learn and start watching and developing and going and watching my videos and going and learning about indicators and oscillators and technical analysis and technical and price action and chart patterns. And maybe down the road when the world gets back to a normal place, you might be ready for a new career. So thank you very much for joining us, and stay safe, stay healthy, and good luck.